welcome to GMO Media presents Incredible Brands Season 2 in association with NDTV Profit. I'm Gauri Dwivedi, and on the show today with me, there are the founders of Efficient Capital Labs, Kaustav Das, who's the co-founder and CEO, and Manish Arora, who's the co-founder and COO. Now, viewers, ECL is a platform providing non-dilutive capital to Indian SaaS founders. It is not your typical fintech. It is founder first, operator led, and globally minded in its outlook, and which is why it would be great to listen from the founders today in terms of their thoughts regarding the business and their plans going forward. Thank you so much, gentlemen, for speaking to us today. And Kaustav, let me start with you in terms of why you work with giants like Amex, but also live the builder's journey. What was the moment you realized that the startup funding model really needed a complete rethink, and ECL had to come in and had to exist?
Well, before I start, first, thank you for giving us a platform and this opportunity to have this conversation. Yes, my journey started with American Express. I was there for like good 15 years. The interesting thing is, within American Express, we had started the fintech division. I was the first few employees in Amex when we started the fintech division. So I saw it growing from a 3-member organization to almost a 150-member organization. And that part of the journey in which we were funding these small businesses exposed me to how to help these small businesses grow from scratch. After that, I went to a company called Cabbage. I was the chief risk officer, played multiple CRO roles. And back in 2021, when it was the boom of software all across the globe, I was approached by one of our competitors to actually help them scope for a particular revenue-based financing company in India itself, interestingly. So at that point in time, VC capital was flooding the India market. There was a lot of capital that was there. But the VC money was different from alternative financing. And that's when in 2021, when I came out here, I spent 2 months talking to a lot of these software companies that were there. And that was the epiphany. That's when I realized that while the market was flooded with VC capital, right, the alternative financing was missing. And the other interesting thing that we also realized that most of the companies that were coming out of India were global first, right? It's not like they were only building for India, but they were also building for the global markets. And that is the second thing which we realized, that helping with funding in different geographies was the key to make these software companies successful. Right. And that was when Efficient Capital was born. I got in touch with Manish, whom I had known for like 8 years by then. We started brainstorming and something clicked, and that's when the first seed of Efficient Capital was founded. All
right. And Manish, let me then come to you in terms of you've built and scaled fintech platforms globally. What did you notice?
Well, there were two things. Now, if I could start by answering it from a founder's perspective or from a demand perspective. One of the things that we saw is that Indian founders, they over-indexed on venture capital or equity as a form of capital. Now, there's no problem with that, but looking at it as the only source of funding available is a problem. And there were two issues with that. One is that a lot of SaaS businesses, they don't always lend themselves to enormous amounts of equity capital. Right. Yeah, because they are relatively small TAMs that are there. And the other reason is that when you do it too quickly in the process of building a startup, then you end up diluting yourself too much, and you don't end up creating a lot of wealth for the founders, which we thought was a problem. Even from supply perspective, one of the issues that we saw was that a lot of Indian VCs, they looked for businesses that kind of emulated what had been successfully done in the West. So both from a supply perspective as well as from a demand perspective, we saw a challenge. Right. And in that challenge, we saw the opportunity, and that inspired us to build ECL.
All right. Kaustav, in terms of the mindset of Indian promoters, what do you think would be the single biggest challenge that required you to probably work more in terms of, capital and the traditional mindset that Indian promoters have?
Mindset that I realized is whenever you are raising VC capital, it's something for you to be very proud of. Yeah. And whenever you're thinking about alternative financing, call it debt, call it any other word that you use, it's something that you are not proud of. So the biggest mindset that we battle with is that when you are taking alternative financing, that it is a tool for growth. It is a tool for expansion. It is a tool for go-to-market strategy. It is a tool to be profitable. this is something that what we grapple with. It's not just one form of capital, which is equity, but the other forms of capital that are available. The interesting thing was, like, at the very beginning, like 3 years back, when I reflect on the journey, 3 years back, companies, software companies doing very well would come to us when they've got like 3 months of runway, 4 months of runway that is there. And that is a consultative selling that came to us. We realized that people were using this as an option of last resort. People were not thinking as an option at the very beginning, as a part of capital stack, as a part of growth, as a part of when you raise equity, you can also raise a different form of alternative financing.
Yes.
That education is what we started off 3 years back. It's not a one-day journey. It has been a journey for 3 years where we've worked with, you're going to talk to somebody like SaaS Boomi. We have been in various forums like this, in which we try to tell founders that it's not just equity that is there. When you think about alternative capital, think of the timing, think of the quantum that is there.
No, that's an important aspect you mentioned. And Manish, let me then come to you. ECL talks about offering Goldilocks capital, not too early, not too late, and never too much. What does that mean in terms of the landscape of the startup system right now, and how does that shift? How, does it really shift how funders and founders think about capital?
We provide capital which is just the right amount of capital at the right stage of the business. So it can't come too early because we are a revenue-based financing player. So the businesses have to have found product market fit. Once they are above a certain size, that's when we come in. It can't come too late. No kind of capital can come too late, because if a form of capital is coming too late, essentially what it means is that you are leaving opportunities untapped. You are leaving money on the table. And finally, it can't be too much, because too much of capital without having a commensurate sort of need for capital is not good for any business, regardless of the nature of capital, because a capital, any form of capital always carries a cost associated with it.
Yes.
So be it dilutive, be it non-dilutive capital, you only take capital as much as you need. If you take too much, essentially what you are doing is value destruction. So
Absolutely.
we like to think of ourselves as Goldilocks capital.
Kostovich, I want to talk about the AI first startups that are emerging, macro shift that is taking place, but many still have SaaS business models at the very core. Why do you think traditional venture capital or venture debt no longer fit this new hybrid model that now exists?
So AI is something that we talk every day now, whether it's an 8-year-old kid or an 80-year-old, AI is here and it's here to stay. That's my personal opinion. And the adoption of AI has changed dramatically in the past, I would say 2.5, 3 years. And whether it's a SaaS company, I was just discussing before this, like AI is an input and an output, whether you're an input AI or whether you're an output AI. SaaS companies are adopting AI like every day. Now there is, everything is merged, it's blended together. There's nothing called SaaS or there's nothing like AI together. They're blended together, in which every component that is there in SaaS has a component of AI in there. And you also spoke about the VCs. I don't think VCs have moved away from AI or VCs have moved away from SaaS, right?
Okay.
What has happened is it has evolved. What VCs did back in 2021 is different from what we are doing in 2025. The outlook of VCs that they looked at in 2021, when it was what we call a SaaS boom, is no longer the same right now. They're looking for efficiency, they're looking for profitability, they're looking for runway, they're looking for growth at a certain scale that is going to be there. And how is that enabled? That's enabled through AI. So it is not that the VCs have moved away from SaaS or adopted AI more. It has evolved into the few metrics that they did not, or I wouldn't say did not focus as much back in 2021. Those are the ones that's focused in 2025. And the enabling of all of these metrics is done through, a lot of it through AI.
All right. Manish, then let me ask you in terms of the VC capital requiring deep TAMs. You've said that.
Yes.
But India has a lot of mid-sized SaaS companies with healthy ARR. Why is non-dilutive capital the best fit for them, and how is ECL really making that entire thing work?
Yes, absolutely. Look, first of all, VCs requiring deep TAMs or total addressable markets is something that is widely known, and the reason for that is twofold. If you think about it from a relative perspective, then most VCs, if they invest X in a business, they are at least looking at 10X the return. In absolute terms, they are looking at least tens of millions, if not hundreds of millions in terms of an outcome, right? So what happens is when the TAMs are not so deep, they are not so big, a lot of businesses will mature at a value which is value being the ARR, annual recurring revenue, which is not that high. And we see that with SaaS companies all the time, right? So a lot of SaaS companies with perfectly great products, great management, great execution, even they plateau at like 10 million to 20 million ARR. And when a business is going to plateau at that level, then obviously the value of the business is not going to be like significantly different order of magnitude. It will be probably 50, 60 million ARR. And at that level, VCs are not going to be very excited about the kind of exit opportunities that they will get. Now we come in there because the product that we have, it doesn't require 10x returns, right? So this product is suitable for businesses of all kinds. The businesses don't have to have hyper growth. A business which is growing, for instance, at the rate of inflation, plus maybe a couple of percentage points, is a perfectly good business for us.
All right, gentlemen, this conversation, I just want to quickly rope in two more voices before we continue this. And those two are very important voices, viewers. Mr. Avinash Raghav, who is from SaaS Bhumi, a community of SaaS founders. And we also have Mr. Manoj Agarwal, founder of Zozo Day, who's a beneficiary of ECL's Goldilocks Capital. And thank you so much, both of you, for joining us on this very special show. Avinash, let me start with you first in terms of explain to us how critical is ECL for India's early stage SaaS ecosystem.
Yeah, thank you for having me on the show. So ECL is our partner at SaaS Bhumi, and if you understand the overall ecosystem, there are a lot of companies which are VC funded, there are a lot of bootstrap companies, and there are companies which actually need these non-dilutive capital itself. So it comes at a point where many of the VCs have not been able to invest the next round. Many of them need that bridge money, which actually becomes useful for the companies. And this is a capital where, they can actually get easily. Before getting on to the show, I spoke with few founders and they had great things to say as to how ECL advises companies, on why they need the capital, if at all it is required. If at all it is not required, they'll also advise them not to take the money at this stage itself. So it's a very consultative sell, as Kaustav mentioned earlier, but a lot of times I feel this is something which is really required, and a lot of companies which have not been able to raise their next round or something, ECL has been of great help to these companies. I think it's been a big boost to the ecosystem as well.
Mr. Manoj Agarwal, then let me understand from you, how did funds from ECL really transform your company? Share your thoughts there.
See, we have been on a very good growth journey, and for any growth journey, you always need growth capital. Now, we always had options like equity and then other options around debt. Now, equity for any founder is very costly and it's also very complex because there are a lot of processes involved. Now, in such a scenario, a short-term debt capital becomes very handy, and which is where ECL has been doing very well for us. We have been working with them for almost like 3 years now. There are other options also apart from ECL, but what we have seen in the market is that the traditional players are either broken, the experience is broken, a lot of paperwork, complex systems, so not the best of experiences. With ECL, the team has been very forthcoming. They are very digital first, so the entire process, right from the loan processing till the time the disbursement is made, it's completely digitalized. It takes few minutes to kind of get to the process, and the overall experience is also very frictionless. The speed of disbursement is very good. Few more things which I can recall is that they understand the Indian founders and the Indian problem statements very well, which sometimes becomes hard to understand if we take a similar growth capital from, say, an international fund or some international VC, so which is where ECL comes very handy. It has been a pleasure working with ECL, and I would strongly recommend founders who are in the growth stage to really consider companies like ECL.
All right, we're going to leave it there. Thank you so much, gentlemen, both of you, for joining us on this special show. And viewers, on that note, a quick break. We return on the other side with this discussion that continues. Stay tuned. Welcome back. You're watching this very special show where we are in conversation with co-founders of ECL. And Kaustav, let me start now by asking you in terms of ECL positions itself as founder first and operator led. How does that show up in your underwriting or partnerships? If you could probably share us with an example and help us understand this.
There are quite a few examples. This question actually brings back memories in which when we started off, again, 3 years back, it was third or fourth month, Manish, I think, into there was this one very particular company, around $1.5 million of ARR, very positive in terms of getting VC funded. And what happened was, at the last moment, the VC pulled back even after giving them a term sheet, right? So they called us and they said that this is the situation that they are in. And I said, like, why don't you go through the application process? And when we looked at it, it was an absolutely fundable business, right? They were profitable, $1.5 million in ARR, they got enough runway. So my question to them was, like, why would you even consider right now taking a VC funding as opposed to taking a couple of $100,000 from us and get yourself as the last mile? And it was a 2 a.m. call with 2 a.m. from my time. It was morning in India. And by the time when I woke up in the morning, the application was there. In 24 hours, we had the funds into their bank account. And guess what? They are right now a $3.5 million company as we speak, with 14 fundings from us in the past 3 years. And the important thing out there was, it's very easy to back out when you feel that somebody has left you, we must have missed something. We did not. We went ahead, had the conversation with that founders. There were 2 founders that were there. And it was a seamless process. And as I said, like, that's how you gain confidence and you gain a customer for life. That's the first thing. The second thing that I want to also talk about, we spoke a lot about VCs. From a partnership perspective, VCs are the biggest partner that we have, right? All across the globe, whether it's US, whether it's India, we have the biggest partnership from VCs. They are the ones who refer customers for various reasons. And whether it is a $200,000 ARR or whether it's a $20 million ARR company, we are able to partner with them and get them through what they need.
Manish, then let me ask you about the fact that you often work alongside VCs, not against them. What's the typical founder profile that actually comes to Efficient Capital Labs? Are they between rounds? Is it post-VC, pre-VC? Help us understand that.
Yes, absolutely. So look, first of all, we fund all kinds of companies, and as Kaustav has just said, we always work alongside VCs. We are kind of complementing the role that VCs provide to the ecosystem. Now, to answer your question more specifically, all our customers are post-product market fit. Around 15% of our customers would be either bootstrapped or non-VC funded, as in they could have equity funding, but it would have been like friends and family, for instance. Businesses come to us right on the back of a VC funding. For example, somebody raised $2 million in VC funding, they'll take another 500, 600K from us, and instead of a runway of 18 months, they'll have a runway of 24 months, for instance, right? So that happens very often. Like Kaustav earlier mentioned, like this kind of last mile or bridge funding, like that's a very common use case. So, so to frame it the way you framed it, like that's pre-VC, if you like, yeah. So people will come to us maybe 6, 8 months, 12 months before they intend to go to the use case. There is pretty much like raise ARR to a level where the valuations become a little more attractive, the dilution becomes a little more attractive, so that happens. And a lot of our funding is actually completely asynchronous to dilutive funding.
Okay.
Yeah, which means like it doesn't have any bearing on like when people are intending to raise dilutive capital. So a common use case for us is go-to-market investments. So a lot of businesses that are looking to expand their market presence in the US, for instance, they'll take funds from us, and it's completely asynchronous to any other funding activity that they are engaging in.
You mentioned about speed and the turnaround time that was so quick in the example that you gave. What's the back-end machinery that actually allows this speed, where you are actually offering capital in 48 to 72 hours, and the trade-off, and to ensure that you walk that fine line, towards quality? How do you achieve that?
For me, just as a background, I've been in the risk domain 22 years of my career, right? And one of the things what we have learned is never compromise on risk when you are supporting a particular company. Same point that Manish had made before is the fact that it is the right amount of capital is what we look at. The third thing is, we also spoke about AI. The adoption of AI, adoption of automation has been the principle. It's a fintech. You cannot have any one of these components more than the other. There's a fin component where you give the right amount of capital with the right amount of risk, and there's a tech component where you do it in an automated manner. You make it seamless for the customers. You make it seamless for the team that is doing it. It's a combination of this is what makes it more successful.
Great. Which brings me to my last question, which is that your long-term vision for Efficient Capital Lab.
So I think in terms of our long-term vision, essentially what is it that we want to do? We want to help our clients with their international expansion, if you like, with their international business. Now, towards that journey, like we started by providing them capital, but there are many things that businesses will need as they think about international expansion. So our idea is that whenever B2B businesses, particularly in the tech space, B2B SaaS, AI businesses, and from India, they think about like expanding internationally, we should be the top of mind.
The first and the most important thing is Efficient Capital is there for B2B, AI, and SaaS founders, right? We are here to stay. We started 3 years back, and we have funded more than 200 companies that are there. We have funded more than $150 million, helping some of these companies grow. And what we intend to be in the next 5 years is something beyond financing. Whenever you think about these cross-border companies that's originating from India, they want to be global. Anything to do with payments, anything to do with banking, of money movement, that is where we will be in the next 5 years.
All right. We wrap things up. Thank you so much, both of you, for joining me in this very special show. We touched upon some very important aspects in terms of capital, in terms of what is the future of capital going forward, specifically in the space that you operate. Thank you so much, both of you, for taking out the time and joining us in this special show. With that is a wrap of the show. Thank you so much for watching.